All right, so if we were to look at the daily overview, company portfolio performance, I'm just unsure of where we stand. I mean, the portfolio could be just done, and the count be totally done, but we're gonna find out. I think we need it to flush out through tomorrow because we had a huge pullback. We had 4 hour market structure breaks, and I think it needs time to process. That's kind of usually how it works, but we're gonna find out just if it's alive or not. But we were pretty much on the right track. It's just we got squeezed to zero on the overall equity. And then your portfolio performance summary. We did that a video already. You would just have to look at the previous videos for 1/30/2023. Daily closing thoughts, SP500. So depending on what kind of feed you looked at, the feed looked like that you broke resistance, but according to this feed you did. But if you went to the TVC, which is I think it's like the official. If we could go, we could look at the CBOE or the TVC. But if we look at the TVC, we actually closed below weekly resistance there, and it's no wonder that we're rejecting. If we looked at the CBOE feed, it's the same deal. So I'm using a synthetic just because I like to use a synthetic. It's not always correct, but for the most part, it's close. And if we were to just use kind of what I have here on MetaTrader 4 that I've been just using as is, moved here to the weekly, it looks like if we put this on resistance, it was right at resistance. It looks like maybe a little bit under, close a little above. So it matches more of what I see in my feed, but the new open on the weekly matches exactly that resistance. So it's a little bit of a fake out on the synthetic feed. But nonetheless, we stopped at weekly resistance, and my lack of putting out a video over the weekend kind of recognized that, hey, there is some divergence on the data, and we're just going to wait it out until we can confirm more. And it does look like the either the top or resistance, and we hit it on the weekly, and there's a high chance of rejecting. Now, in terms of like the fake out, I think we did a first squeeze on just squeezing out the bears. Now it looks like it would be more apt to resume and get back into the trap. We're kind of waiting to see what it does, but my inclination is to short as much until there is no reason to short, which would be down here. But the thing is, our expectation is this will break through and will close below here. When that's going to happen, I have no idea. But a lot of people like to use the measured move, and this kind of measured move here could be some kind of place to start. I think we have to use the info line. So we did info line here, and we were to move the info line here, we would end up close to 3,200, roughly. I mean, if we were to do from wick to wick, that's kind of just wick to wick. You know, roughly around 3,200, or from the close. So that's kind of just what we're expecting. Here, this is on the weekly, so it took a couple weeks for us to reach to the bottom, but it looks like around kind of late March we'd kind of be there, and then turn around about face for the end of March into Q2. But it's kind of just what we're expecting, some kind of breakdown, slow breakdown, and then maybe the second week. So this first week we've kind of pretty much made a similar candle here, and then I guess next week we expect a bigger fallout. Maybe that's this week. We'll get maybe 2 of these candles, and then we'll have some maybe volatility here, and then breakdown. But that's the overall idea that people are thinking, is that if since this got defended, that we're gonna be having a similar move to the measured move. And that's pretty much all I can say right now. Like, until market structure breaks to the upside, there is no way that we can know that the bulls are in charge. And we didn't really close the week according to the CBOE or TVC data feed. We'd never really closed the week above that zone. We just got out of the bull trap. Now we're about to go back into the trap. But it really depends on just kind of the collective thinking, and we're going to go look at that next. So oil on the weekly, looks like we failed the trap. We did not really get above it, and I mean, we closed the week above, but it would look like a failed breakout once we hit that trap signal, and then it's just a matter of taking out these weekly lows. And then next would be credit spreads. We'll look at HYG, HYGH. Nice gap down on the week open. HYGH. Looks like the credit spread is narrowing and not looking good. We start taking out lows here and support on weekly closes, then it's going to be toast. Just need to close below here, on here, and then also on this weekly close, I think we'll be seeing more fragility in the market. Right now, these weekly closes are holding, and then we're really on the thing that made me think that we might get another kind of rally was like the euro. Let's see, on the 12-hour, I think, I don't know, or at least like some kind of short-term pump. But once this 12-hour breaks, I think I need to add symbol. I don't know if that's in here. Symbol. I need to get it adjusted, but it's the euro on the 12-hour, and we roughly got 9 hours, but we want to see a market structure break. We never really got that, but we're looking for it to come soon on the euro. And right now we're at weekly resistance. That's all I could say there. And then Japanese yen, we hit weekly resistance, but we're at weekly support. So we're either going to roll down here, or it's going to be a bounce, and we're going to reclaim some highs, and we're going to close this gap on the weekly breaker. And it's a matter of closing the week above this level, or specifically a more defined outer bound, which would be this level. And then I think we'll look at the US dollar. It's been looking like it wants to catch a bounce. Looks like we got defended here. We didn't close below. We just opened below, and we closed above, and then now retested as support. Now we're looking for some stronger move. It looks like we got a nice gap on the fair value gap on the weekly here. Here's the fair value gap, and it's going to want to close it, and that's what we're expecting, is the dollar to catch a bid. Vantage Point AI pointed this out on YouTube. Vantage Point AI, look at it's more of like an AI tool. The market outlook for January, and it was talking about the dollar. It looked really good. Like I wish I could buy the software. I don't have the funds yet, but if I do get a chance, like, I would love to use this in my analysis. But in the meantime, in the meantime being, I could just reference the video, and it was basically pointing to some dollar strength to come. When we look at here on the 12-hour market structure break, we haven't really gotten it yet, but this is kind of what I would wait for. I would wait for the 12-hour market structure break to close, break the make a breaker, basically squash some bears, and then retest resumption. But yeah, this is what I would be waiting for just a confirmation of that happening. But we have like some great indicators that it's going that way. Early indicators, leading, which is this weekly support. All right, and then the VIX broke the 4-hour, 4-hour, but didn't break the 12-hour. So we're waiting for this to break the 12-hour on the VIX for it to really confirm that there's a reversal to the upside in the VIX, and that's kind of going to be something that's going to be noteworthy. Both the dollar breaking the 12-hour to the upside, and the VIX breaking the 12-hour to the upside, and the euro breaking the 12-hour to the downside, I think would be all really significant going forward in the risk-off narrative. But obviously, there's no confirmation that any of those things happened yet. But we do, if we were to look for some leading things, would be the double stripe we got on the 12-hour and the 8-hour for a topping signal on momentum. That's really early. It's like the earliest for a topping signal I can get without it being really leading, about like 1 to 2 weeks. If we look at stock charts, which is the most forward leading indicator I have for the kind of possible reversal, is the institutional bias. And that one has already moved to the bear side. Let's go ahead and take a look what it's doing on right now. So it's currently heading towards maybe the middle on the Dow, and then here on the SP500 it's still short, so we're expecting more downside on the SP500, and then maybe by next week we'll catch a bounce. But for now, because it leads like a week or two, we're still expecting more short side. So that's pretty much it for just the overall picture of the S&P 500. If we were to try to forecast or estimate kind of where we would expect another bounce, it would probably be at these lows, a short-term bounce, or a weekly close below, and then a bounce at these wick lows, and maybe here at this weekly support on this down candle here. Just about like a close, like a wick through here, and a close above, and a rejection on the first week of February, roughly. I don't know, or no, the second week of February, and then third or fourth week we start to roll over, going into March. That's just a rough idea. I'm not saying that's going to happen, just to kind of what I'm thinking going forward, that pretty much the top might be in, and that this is it. And it's like highly speculatory, so that's something you have to keep in mind. But with the fundamental data from EBP research, with the ISM orders and services PMI, they look like they're heading towards recessionary levels, according to Eric. And then he's also saying that we might have, there's chances that we've entered a recession in December. Even the Dallas Fed was indicating that it's highly probable we're heading towards a recession. That's a little bit of a paraphrase. But that's kind of just what we're up against and what we're thinking. And we're really looking for that play in between here and 3,200, and then taking up a long and going there from there into Q2. But that's kind of just the overall idea of what we're thinking until we hit our invalidation zones. And so far, the invalidation hasn't been proven yet, and it's a little bit of a fake out for the bulls because it was just so hyped, especially with Jim Cramer. Just good rule of thumb, whatever Jim Cramer's thinking, just do the opposite. I mean, it worked against me in the squeeze on my crypto shorts, but with that crypto being the top asset class of 2023 already, and look where it got me. So it's something to really consider when inverse Kramer, because the statistics that are behind that. But anyways, thanks for watching for the daily overview. Talk soon.